Anticipated 50% growth in the EV market by Q1 2025, impact on automotive, transportation, and renewable energy sectors. Executive Summary. The electric vehicle EV market is poised for significant growth, with projections indicating a potential 50% increase in sales by the first quarter of 2025. This surge is expected to have profound implications for the automotive, transportation, and renewable energy sectors, particularly as industry leaders like Tesla and Volkswagen adapt their strategies to retain market share amidst intensifying global competition. In 2023, global sales of electric cars reached approximately 14 million units, marking a 35% increase from the previous year and representing about 18% of total car sales. The primary markets driving this growth are China, Europe, and the United States, which collectively accounted for nearly 95% of global electric car sales. As the market matures, traditional automakers are feeling the pressure to innovate and compete effectively against emerging players. Current market overview. 1. Sales trends. In 2023, nearly 14 million electric cars were sold globally, with China leading the charge with 8.1 million registrations, followed by Europe approximately 3.2 million and the United States 1.4 million. Battery electric vehicles (BEVs) constituted about 70% of the electric car stock, with a notable trend towards larger vehicles, particularly SUVs, which accounted for over 65% of new registrations. 2. Regional dynamics. China. Despite the withdrawal of purchase subsidies, the Chinese EV market is maturing rapidly. The overall car market contracted by 8% for conventional vehicles, while electric car sales grew by 35%. China has also emerged as the largest auto exporter, with significant growth in EV exports. United States. The U.S. market saw a 40% increase in electric car registrations, aided by revised qualifications for tax credits and price reductions on popular models like the Tesla Model Y. Europe. The European market experienced a slower growth rate, with overall EV sales reaching nearly 3.2 million units. The phase-out of subsidies in key markets like Germany has impacted the growth rate, but countries like Norway and Sweden continue to see high adoption rates. 2. Competitive landscape. 1. Key players. Tesla and BYD remain dominant forces, with BYD surpassing Tesla in total EV sales when including plug-in hybrids. Tesla maintains a significant share of the BEV market but faces increased competition from both established and emerging manufacturers. Traditional automakers are struggling to keep pace with the rapid innovation and consumer demand for EVs, leading to a decline in their market share. 2. Strategic adaptations. Major players are revising their strategies in response to changing market dynamics. For instance, Ford and GM have indicated a willingness to collaborate to combat competition from Chinese automakers. Companies are focusing on securing supply chains for critical minerals necessary for battery production. As investment in EV startups and battery technologies has seen a decline due to increased competition and perceived risks. 3. A future outlook. 1. Sales projections. Electric car sales are expected to reach around 17 million in 2024, a trend driven by both established and emerging markets. The transition to EVs is seen as crucial for achieving emissions reduction targets, with potential benefits for air quality and energy security. 2. Technological advancements. Advancements in battery technology are leading to improvements in vehicle range and performance. The average range of electric vehicles has increased significantly, particularly for larger models, which are becoming more popular among consumers. Continued investment in battery recycling and critical mineral extraction is essential for sustaining EV production and reducing environmental impacts. 3. Market challenges. Despite the optimistic outlook, challenges remain, including high interest rates, economic uncertainty, and regulatory hurdles. The U.S. market faces tightening CO2 regulations and potential changes to subsidy structures, while Europe grapples with competition from low-cost Chinese imports. 4. Conclusion. The anticipated 50% growth in the EV market by Q1 2025 reflects a complex interplay of competitive dynamics, technological advancements, and evolving consumer preferences. Key manufacturers must adapt their strategies to navigate this rapidly changing landscape, focusing on innovation, supply chain resilience, and market expansion. As the transition to electric mobility accelerates, the implications for the automotive, transportation, and renewable energy sectors will be profound, paving the way for a more sustainable future. References: 1. International Energy Agency (IEA) reports. 2. Market analysis and sales data from 2023. 3. Insights from major EV manufacturers and industry experts. This report outlines the anticipated growth and dynamics of the EV market, highlighting the impact on various sectors and the strategic responses of key players. The anticipated 50% growth in the electric vehicle EV market by Q1 2025 is expected to have multifaceted impacts across the automotive, transportation, and renewable energy sectors, with significant implications for global competitors such as Tesla and Volkswagen. The complexities of this growth highlight counterintuitive trends and market dynamics that challenge conventional expectations. One notable counterintuitive aspect is the rapid increase in sales of battery electric vehicles (BEVs) despite the withdrawal of purchase subsidies in key markets like China. While one might expect that the cessation of financial incentives would hinder sales, the data indicates a robust 35% year-on-year growth in new electric car registrations in China, reaching 8.1 million units in 2023. This phenomenon suggests a maturation of the market where consumers are increasingly willing to invest in electric vehicles without the need for subsidies, indicating a shift in consumer perception and acceptance of EVs as viable alternatives to internal combustion engine (ICE) vehicles. Another surprising trend is the dominance of larger vehicle segments, particularly SUVs, in the EV market. While smaller and more affordable electric models are often touted as essential for mass adoption, over 65% of new EV registrations in 2023 were for larger models. This shift reflects consumer preferences for vehicles that offer greater range and space, but it also poses challenges in terms of battery supply chains and critical mineral demands. Larger EVs typically require bigger batteries, which in turn necessitates more raw materials such as lithium, nickel, and cobalt. The increased demand for these minerals could lead to supply constraints and environmental concerns, countering some of the sustainability benefits associated with electrification. Interestingly, the competition landscape is also evolving in unexpected ways. Traditional automakers have seen their market share diminish as newcomers like BYD and Tesla capture significant portions of the EV market. BYD, for instance, surpassed Tesla in 2023 as the best-selling EV manufacturer when accounting for plug-in hybrids, indicating that established players are facing intense pressure from agile newcomers who can adapt to changing market conditions more readily. This shift challenges the assumption that legacy automakers will retain their dominance as the market transitions to electric vehicles. Investment trends reveal another layer of complexity. While venture capital funding for EV startups declined in 2023 due to increased competition and perceived risks, there remains a strong interest in areas such as battery recycling and critical mineral extraction. This shift indicates a growing recognition of the importance of sustainable practices within the EV ecosystem, yet it also highlights the volatility of investor confidence in the face of market saturation and economic uncertainties. Additionally, regional differences in EV adoption reveal counterintuitive dynamics. In the United States, the tightening of CO2 regulations and subsidy changes present challenges for domestic EV growth, contrasting sharply with the rapid adoption seen in China and Europe. This discrepancy underscores the varying impacts of policy frameworks on market performance and emphasizes the need for tailored strategies in different regions. Despite these challenges, projections indicate that electric car sales could reach approximately 17 million units in 2024, signifying a continued upward trajectory for the market. However, the pathway to achieving emissions reduction goals through electrification is not straightforward. The dominance of larger vehicles and the associated environmental impacts raise questions about the overall sustainability of the transition, particularly if it leads to increased energy consumption and resource depletion. In conclusion, the anticipated growth of the EV market by Q1 2025 is characterized by counterintuitive trends that challenge conventional wisdom. The maturation of consumer acceptance, the dominance of larger vehicles, evolving competition, shifting investment patterns, and regional disparities all contribute to a complex landscape that requires adaptive strategies from automotive manufacturers and policymakers alike. As the market continues to evolve, stakeholders must navigate these dynamics to harness the potential benefits of electrification while addressing the associated challenges. The report on the anticipated growth in the electric vehicle EV market highlights several critical elements that may be overlooked but are significant to understanding the broader implications of this shift. Here are some important points that warrant deeper consideration. 1. Concentration of sales in major markets. The report emphasizes that nearly 95% of global EV sales in 2023 were concentrated in just three major markets: China, Europe, and the United States. China alone accounted for 60% of these sales, with a rapid increase even after the withdrawal of purchase subsidies. This concentration indicates that while the EV market is growing, its dependency on these regions could pose risks if economic or regulatory conditions change. For instance, any economic slowdown in China could significantly impact global EV sales, as the country is a major driver of the market. Significance: this concentration underscores the vulnerability of the EV market to regional economic fluctuations and policy shifts, suggesting that manufacturers should diversify their market strategies and seek growth in emerging markets to mitigate risks. 2. Shift towards larger vehicles. The report notes a significant trend towards larger EV models such as SUVs and pickups, which accounted for over 65% of new registrations in 2023. This trend not only influences consumer preferences but also affects battery supply chains and critical mineral demand. Larger vehicles require bigger batteries, which in turn necessitate more critical minerals like lithium, nickel, and cobalt. Significance: the preference for larger vehicles could exacerbate supply chain challenges and impact the environmental benefits of EV adoption. If larger EVs lead to higher energy consumption and greater material requirements, the overall carbon footprint could negate some of the emissions benefits associated with transitioning to electric mobility. Therefore, this shift could have far-reaching implications for sustainability efforts. 3. Divergent regional regulations. The report highlights different regulatory environments across major markets, particularly in the US and Europe. For instance, the tightening of CO2 regulations in the US and the phase-out of subsidies in Germany have created a more challenging landscape for EV manufacturers. Conversely, China's continued support for its NEV industry despite subsidy cuts reflects a different regulatory philosophy. Significance: manufacturers must navigate these complex regulatory landscapes carefully. The evolving regulations will not only influence sales strategies but could also determine which technologies gain traction in the market. Understanding local regulations and adapting to them could provide significant competitive advantages. 4. Investment trends and startup challenges. The report indicates a decline in venture capital investment in EV startups and battery technologies attributed to increased competition and perceived risks. This decline contrasts with the robust interest in battery recycling and critical mineral extraction. Significance: the drop in funding for EV startups could stifle innovation and slow the pace of technological advancements necessary for the industry. As the market matures, fewer new entrants may struggle to secure funding, potentially leading to a consolidation of power among established players. This situation could hinder competition and limit consumer choices in the long run. 5. Emerging market dynamics. While the report notes that emerging markets are beginning to see increased EV sales, it highlights that these markets remain significantly underdeveloped compared to major markets. Countries like India and Brazil have shown promise, but their market shares are still low and the growth is occurring from a small base. Significance: this presents both challenges and opportunities. For established manufacturers, entering emerging markets could provide new growth avenues, but it also comes with risks associated with varying consumer preferences, infrastructure challenges, and economic conditions. Understanding these dynamics will be crucial for companies looking to expand into these regions. 6. Impact of battery technology and recycling. The report underscores the importance of advancements in battery technology and the growing interest in battery recycling. As EV adoption increases, so does the need for sustainable battery solutions that minimize environmental impacts. Significance: companies that invest in battery recycling technologies and sustainable practices will likely gain a competitive edge. Moreover, the ability to recycle batteries effectively could alleviate some of the supply chain pressures associated with sourcing critical minerals, thereby promoting a more circular economy within the EV industry. 7. Consumer preferences and total cost of ownership. The report points out that despite the increasing availability and affordability of electric vehicles, upfront costs remain a significant barrier to widespread adoption. The total cost of ownership (TCO) analysis suggests that while EVs may save money in the long run, the initial price is still a deterrent for many consumers. Significance: addressing the upfront cost barrier through innovative financing solutions, subsidies, or lower cost models will be essential for driving mass adoption of EVs. Manufacturers must consider consumer perspectives and develop strategies that make EVs more accessible to a broader demographic. In conclusion, while the anticipated growth in the EV market is promising, several critical factors must be monitored closely. The concentration of sales in major markets, shifting consumer preferences towards larger vehicles, regional regulatory variations, investment trends, emerging market dynamics, advancements in battery technology, and the importance of addressing upfront costs are all significant elements that could shape the future of the EV industry. Understanding these nuances will be key for stakeholders aiming to navigate the evolving landscape of electric mobility effectively. Here are the 4 most valuable points from the content regarding the anticipated 50% growth in the electric vehicle EV market and its impact on the automotive, transportation, and renewable energy sectors by Q1 2025. 1. Market dynamics and regional growth trends. The projected 50% growth in the EV market by Q1 2025 is largely driven by significant sales increases in major markets, China, Europe, and the United States, which together accounted for nearly 95% of global electric car sales in 2023. China has been the leader with 8.1 million new electric vehicle registrations in 2023, showcasing a 35% increase from the previous year. This trend illustrates the maturation of the EV market even in the absence of purchase subsidies in China. Meanwhile, the US and Europe are also experiencing growth, albeit with varying dynamics. For example, the US is facing challenges from tightening CO2 regulations and subsidy changes, while European manufacturers are pressured by competitive low-cost imports from China. 2. Shift toward larger vehicle segments. A notable shift in consumer preference is towards larger electric vehicles, EVs, particularly SUVs and trucks, which accounted for over 65% of new registrations in 2023. This trend is supported by advancements in battery technology that allow for increased range and performance in larger models compared to smaller ones. While this shift caters to consumer demand for longer-range vehicles, it raises concerns regarding resource demand for larger batteries and the environmental implications of producing such vehicles. Policymakers may need to address these issues to ensure that the transition to electric mobility aligns with broader environmental goals. 3. Intensified competition and changing market structure. The competition in the EV market is intensifying, with companies like Tesla and BYD leading but facing challenges from emerging players and traditional automakers adapting to the EV landscape. The market share of traditional automakers has been declining as they struggle to keep pace with innovation and shifting consumer preferences. This competitive pressure is leading to significant pricing strategies, including price cuts from Tesla and BYD to maintain market share, which in turn affects profit margins and investor confidence in EV stocks. The landscape is evolving, with a trend toward consolidation as less profitable manufacturers may exit the market. 4. Investment trends and challenges in the EV ecosystem. Investment in EV startups and battery technologies saw a decline in 2023 attributed to increased competition and perceived risks. However, there remains strong interest in critical areas such as battery recycling and mineral extraction, which are essential for sustainable EV production. As demand for EVs grows, the need for reliable supply chains for critical minerals becomes increasingly important. Companies are seeking to secure direct deals with battery manufacturers and mining companies to ensure supply stability. The interplay of investment, competition, and innovation in battery technology will be crucial for the future success of the EV market. These 4 points encapsulate the complexity of the evolving EV market and highlight the interplay between consumer preferences, competition, investment dynamics, and regional growth trends that will shape the future of the automotive, transportation, and renewable energy sectors. Each of these elements warrants in-depth analysis and discussion to fully understand the implications of the anticipated 50% growth in the EV market by Q1 2025. 1. The rise of the automobile industry. Late 19th to early 20th century, the emergence of the automobile industry in the late 1800s and early 1900s serves as a parallel to the current growth in the electric vehicle EV market. Companies like Ford, General Motors, and Chrysler began to dominate the automotive landscape, revolutionizing transportation through mass production and innovative manufacturing techniques. Just as Tesla and Volkswagen are adapting strategies to maintain market share in the evolving EV sector, traditional automakers at the time had to pivot from horse-drawn carriages to embrace the automobile, leading to a profound transformation in the transportation industry and significant societal changes. 2. The dot-com bubble. 1990s. The rapid expansion of the internet and technology companies during the 1990s mirrors the current trajectory of the EV market. Companies like Amazon and eBay emerged as market leaders, while established businesses had to adapt to the digital age to survive. The volatility of the tech stock market during this period reflects the current fluctuations in the EV market, where companies face intense competition, price volatility, and the challenge of maintaining investor confidence amid rapid changes in consumer demand and technological advancements. 3. The renewable energy boom. 2000s to present. The growth of the renewable energy sector, particularly solar and wind power, highlights a similar narrative to the anticipated growth in the EV market. As global awareness of climate change increased, investments in renewable energy technologies surged, prompting traditional energy companies to adapt or risk obsolescence. The competitive landscape for renewable energy mirrors the current dynamics in the EV market, where companies must innovate and invest in new technologies to capture emerging market opportunities and address regulatory pressures aimed at reducing carbon emissions. The electric vehicle EV market is poised for remarkable growth, with a projected increase of 50% by Q1 2025. This growth is set to have far-reaching implications for the automotive, transportation, and renewable energy sectors. The surge in demand for electric vehicles is driven by advancements in technology, evolving consumer preferences, and the intensifying competition among global players, particularly Tesla and Volkswagen. Market overview and projections. As of 2023, electric vehicle sales reached nearly 14 million units globally, reflecting a 35% increase from the previous year and constituting about 18% of total car sales. Key markets include China, Europe, and the United States, which together account for approximately 95% of global EV sales. China leads the charge with 8.1 million new registrations, while Europe and the US have 3.2 million and 1.4 million respectively. Looking forward, electric car sales are projected to reach around 17 million in 2024. This growth trajectory suggests that by Q1 2025 the EV market will have significantly matured, with a growing share of sales coming from emerging markets. The transition to electric mobility is increasingly seen as integral to achieving global emissions reduction targets, offering benefits in terms of air quality and energy security. Key drivers of growth. 1. Technological advancements. Battery technology is evolving rapidly, resulting in increased ranges and reduced costs. The average range of electric vehicles has risen significantly, making them more appealing to consumers who prioritize long-distance travel. This trend is expected to continue, further enhancing the appeal of EVs. 2. Consumer preferences. There is a clear shift in consumer preferences toward larger vehicles, particularly SUVs, which now dominate EV sales. This trend is a reflection of changing consumer expectations regarding size, range, and safety. Manufacturers are responding by focusing on producing larger electric vehicles, which typically offer higher profit margins. 3. Intensified competition. The competitive landscape is shifting, with traditional automakers like Volkswagen and emerging players like BYD and Rivian increasing their presence in the EV market. Tesla, while still a leader, faces challenges as competitors ramp up production and innovation. The need for adaptive strategies is critical as manufacturers vie for market share. 4. Regulatory support. Governments worldwide are implementing stringent emissions regulations, which further incentivize the adoption of electric vehicles. Financial incentives such as tax credits and subsidies remain significant factors in promoting EV sales, although some regions are beginning to phase these out, necessitating a continued focus on affordability and consumer accessibility. Regional dynamics. The future of the EV market will also be shaped by regional dynamics. In the US, challenges related to tightening CO2 regulations and subsidy changes may slow growth, while in Europe, local manufacturers are increasingly pressured by low-cost imports from China. The concentration of sales in major markets China, Europe, US highlights the need for strategies that can adapt to varying regional demands and regulatory landscapes. Emerging markets, particularly in Southeast Asia and Latin America, are expected to contribute significantly to EV sales growth. For instance, countries like Thailand and Brazil are witnessing rapid increases in electric vehicle registrations, driven by favorable government policies and the introduction of affordable models primarily from Chinese manufacturers. Challenges ahead. Despite the optimistic outlook, several challenges must be addressed. 1. Infrastructure development. The expansion of charging infrastructure is critical to support the growing number of electric vehicles on the road. Investments in public and private charging stations are essential to alleviate range anxiety and improve accessibility for consumers. 2. Supply chain issues. The supply chain for critical materials used in battery production, such as lithium, cobalt, and nickel, is facing disruptions. Companies are seeking to secure direct deals with mining and processing companies to ensure a steady supply of these essential materials. 3. Market saturation. As the market matures, competition will intensify, leading to potential oversupply situations. Companies will need to differentiate their offerings and innovate continuously to maintain market share. 4. Cost parity. Achieving cost parity between electric vehicles and internal combustion engine vehicles remains a key goal. While prices are decreasing, many consumers still perceive electric vehicles as higher-priced alternatives. The introduction of more affordable models will be crucial to reach mass-market adoption. Conclusion. The anticipated 50% growth in the electric vehicle market by Q1 2025 reflects a complex interplay of technological advancements, changing consumer preferences, and evolving competition. The automotive and transportation sectors must adapt to these changes, focusing on innovation, infrastructure development, and affordability to capitalize on the growing demand for electric vehicles. While challenges remain, the future outlook for the EV market is undoubtedly promising, paving the way for a more sustainable and electrified transportation landscape.